putting it around on Twitter, and they've changed the time horizon. Let me see if I can find the chart. So this is the chart that people are using.
Okay, let's get your chart out. I want to try get. There we go. Yes, global money supply, right. M2.
Yeah, that's the one that's going around Twitter right now. But the person who put it up copied our chart, but he used, I think, an 8-week or 8-week lead. We think the best fit is the 12-week lead. Now, who knows who's right in this, right? This is we're all fitting patterns and hoping it works. But generally speaking, for me, this is a rerun of 2017. It's very similar. And that peaked out end of deck, fell 35% in Jan for like 3 weeks, and then rallied. So your hypothesis, I think, is right. I actually think it probably gets to the kind of 110, 120 first. But, it's pretty 50-50 which chart works. But really what it's saying is liquidity, because of the dollar going up ahead of the election, because of rates going up ahead of the election, and the fears about Trump and fears about tariffs and stuff like that, that what was causing that issue, and that does lead whatever's been going on. Also, I think Putin and Ukraine will get resolved. So a lot of the dollar premium, risk premium comes out, oil premium comes out, oil can drop lower, the dollar can weaken just because geopolitical tensions go down. So that's what I think the first order of business is: get this stuff out of the way, get things feeling better, get the economy moving, then start cutting government costs, which takes time, via deregulation first, and then via figuring out how can you save costs. And then there will be a broader implementation of tariffs. But that takes, even Scott Bessent said, we can't rush tariffs. It has to take time and has to be thought through. So that's more likely a 2026 thing, which is usually the back end of the cycle anyway, when liquidity is coming out. So you can see the pattern of liquidity and then liquidity coming out as they really start stripping out government spending and they really start tightening up on tariffs.
You spoke about inflation, or you spoke about reducing rates, and that obviously ties back to inflation. Inflation, the last reading we had wasn't a good one. It was like an increase in inflation, and people started mentioning the word inflation again, and inflation actually coming back in. How do you think they juggle?
It should rally all the way through till US tax season,
which is April. So that's April.
Yeah, it's the March-April period. It usually is extremely strong going into that. And then if it's very strong, then you have a very big correction because everyone needs to pay some taxes. So, and then normally what happens is it corrects again. So you can see it there in 2021. It then had a 50% correction that time. And I'll come on to that in a sec. And then it rallies into year end. I think we're closer to a 2017 analogy, which was a much stronger back end of the year. I think people have real PTSD from last time. And I was actually going through this morning, what was the key factor that caused the stunted cycle last time? It's because the speed the business cycle went up straight out of recession, and how fast financial conditions peaked. They peaked in March of 2021, and the market essentially peaked there with the second attempt at rally. 2017 peaked way towards the end of the year. So it was just the weird setup of the post-COVID, inject all the liquidity, then, oh my God, we need to withdraw it. That setup, I think, caused that cycle, while 2017 and 2013 were more similar.
Okay, and
so that means a correction over the summer and at the risk curve, and then the art has been, some of it's been trading at almost record highs. But other than that, yeah, you're dead right. So I think it's the same playoff. 99% of everything goes to zero, and a few things do well.
But you still think that people are gonna be interested in the culture behind the smoking chicken fish, or the culture behind the dog with the hat?
No.
Yeah. I must say, I think I want to be out of my meme bags by the end of the cycle.
These are all about attention.
Yes.
Something will Doge has captured attention since 2013 or 12. Unbelievable. But others won't capture attention.
I think
it's just a game of attention.
I think Doge. 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 I think Doge I think Doge becomes the biggest meme ever. And the reason is, I think in the next 4 years, I think we're going to hear more about the Department of Government Efficiency than any other anything in the United States. I think that there's going to be Elon and Vivek are going to make so much noise around, like someone said to me the other day, said, this is Elon's presidency. So it's like this is Elon's presidency. But I did read beginning, here it is.
Keep going. Put it on a log scale. You need to put it on a log scale. Oh, is it on log scale? Yeah.
Is it on log scale? It is.
No, on log.
There it is.
So it came out, it corrected, it outperformed, it's causing a flag. I mean, it has outperformed Bitcoin since it came out by 500%.
That's insane. Okay.
So what are we saying here? That Doge is harder money than Bitcoin? Is that what we're saying? Oh, sorry.
It's outperformed Bitcoin by 160x. Well, 1,650%.
Okay.
So that's crazy.
Okay, that's something.
That's 16x.
We may joke about this, but it's been harder money than Bitcoin.
I wonder how many others have been.
I'm just throwing rocks over the fence with that, but you know what I mean, right? And I look at that looks like a flag. If that bloody thing is a flag.
Oh my God. Okay, yeah, I see the flag as well.
Yeah. Well, yeah. And if you look at that on a weekly chart now, if you change it to the weekly and then look at that flag, it's actually broken out.
That's the daily.
Yeah, go to the weekly. Always like trying to look to the really long-term stuff where I can to give me perspective. Right, that's a wedge or cup and handle, whatever you want to talk about there.
There's a real breakout. There's a real breakout that's happening with volume.
Every time it does these wedges, then it breaks in the year after or the election year and the year after. We are there. And so if that is the case and that chart breaks and we start going to new highs, then that means the risk curve goes out, because don't forget, Sui's not in the top 10. Solana is. So anything in below the top 10 is likely to outperform.
Yeah.
And so then you want to get what is the better bets. Now, other people will have other bets versus mine, which is Sui. It might be Say, it might be whatever. Monad could rip when it comes out, whatever it is. Mm-hmm. So I'm not saying, you have to follow my advice, but that's how I see the risk curve. Now, I wouldn't go all in, but I would just reallocate a bit more, because, really what we're trying to do here is we are trying to outperform. That's why we're active. If we weren't, we'd just buy Bitcoin and go to the beach and not do anything.
So do you look at?
And so I just think, well, that's just safer. I'm not trying to make 100x.
Would you take leverage on like, would you increase leverage on these things, or is that not how you increase your exposure?
I've never used leverage. All I've occasionally done is bought call options, very, very occasionally. I've never used leverage.
That is insane. Okay, I must say,
the first rule. Look, it depends how experienced you are. I'm a very experienced risk taker. I don't like leverage because this is the biggest macro trend of all time. The worst thing ever to do is lose your tokens.
Yes. Okay.
Rule number one of the biggest trade of all time is not to be out of the trade. It's as simple as that. And you and I know in crypto, there are so many ways you can fuck this up. Ways you don't even understand.
Don't worry. I fucked it up last cycle. Trust me, I know exactly what.
And people will take your tokens, or the market will take your tokens in more ways than you can possibly think about. And so your job is to try and narrow that window of losing your tokens, which is why I don't use leverage. I'm lifestyle chips off en route because there's some stuff I want to do, but I'm not going to get out of this market. Why would you? I was just hanging out in Silicon Valley with a friend of mine. He bought a lot of Bitcoin at $3.
Is that Dan? Is that Dan or Dan? No, not Dan.
I don't want to talk about. I won't mention him because he's now very off the radar screen. But he was very famous. I mean, that if he bought his original stake, it would be $66 billion.
Oh shit! Wow.
But whatever magnitude of money he's now got, but it's billions and billions and billions of dollars.
I realized that. Yeah, okay,
when I first bought Bitcoin in 2013, I paid $200, and I put a decent sized bet in. 2013, right? 200 grand, and I traded out at 2,000. In 2017, it went up to 20,000. Blah blah blah. if I'd have just held that original position to today, it'd been $100 million.
Yeah. I think it goes back to just keep DCAing. Generally, as hard as it is, try and DCA more when the market goes down and less when the market goes up.
And if you listen to Ansem, if you listen